Are you interested in getting your products or services to more people, expanding your business, becoming more profitable, and a leader in your industry? If yes, then simply open a Zenith Bank SME Grow My Business account and get the extra edge you need. Access loans at competitive rates, get a free business website, free listing on Google My Business to make your offerings visible to over 100 million Nigerians online, free digital trainings on effective marketing techniques, access to business tools to improve operational efficiency, and so much more. Visit any of our branches today to get your Grow My Business account or www.zenithbank.com/SME to learn more. Are you interested in getting your products or services to more people, expanding your business, becoming more profitable, and a leader in your industry? If yes, then simply open a Zenith Bank SME Grow My Business account and get the extra edge you need. Access loans at competitive rates, get a free business website, free listing on Google My Business to make your offerings visible to over 100 million Nigerians online, free digital trainings on effective marketing techniques, access to business tools to improve operational efficiency, and so much more. Visit any of our branches today to get your Grow My Business account or www.zenithbank.com/SME to learn more. Are you interested in getting your products or services to more people, expanding your business, becoming more profitable, and a leader in your industry? If yes, then simply open a Zenith Bank SME Grow My Business account and get the extra edge you need. Access loans at competitive rates, get a free business website, free listing on Google My Business to make your offerings visible to over 100 million Nigerians online.
Good morning, everyone. Good morning, good morning, good morning, and welcome to the February edition of the Zenith SME Learning Series. We are glad to have you with us today. To our returning participants, you already know how we feel about you. We're always excited to have you here with us in our midst. It's truly a pleasure to have you back. And to those joining us for the very first time, a heartfelt welcome to you all. We're excited you have chosen to be a part of this community where learning, growth, and effective collaboration take center stage. Together, we look forward to creating an inspiring and enriching experience for everyone. We would love to know, how did you come to hear about this session? Was it through a friend or an email you received from us or a colleague, maybe a post you saw on our social media platform? Please do well to drop your comments in the Q&A section. We'll be looking out for your responses. Before we dive in, how was your Valentine? How did you celebrate it? Did you take out loans to celebrate your loved one? I mean, it's okay if you had to, get someone to, lend you some cash to celebrate that special person. Anyhow, I'm glad we are all here today to be a part of this session. That was just on a lighter note, but you can indulge us by dropping your responses in the Q&A section. Before we dive in, right? while we're, getting settled, let's make sure nobody misses out because today promises to be exciting. Please do well to, invite your friends. We're streaming live at the moment on YouTube. The link is in the chat. Feel free to share it with your friends, your colleague, even your enemies, right? Love your enemy as yourself. That's what we're preaching today. So please, let's try. Let's share the link. Share the link with your friends. Share the link with your colleague. You can also, search Zenith Bank on the YouTube page and join the stream directly. Let's make this session count. Thanks again for being here. Before we continue, we'd like to take the national anthem. May God bless the Federal Republic of Nigeria. We're all welcome back. Okay, I'm Glory Moses, and I'm really, really delighted to, be your moderator for today's session. I look forward to guiding us through what promises to be an insightful and impactful experience. Before we call on our wonderful speaker today, I'd just like to inform us again that we're streaming live on YouTube. Please share the link, share with your loved ones, share with everyone that you know should be a part of today's session. Also, this is a recorded session. That is, it's gonna be, put up on our YouTube channel after this live program. So perchance there are some friends, there are some loved ones that are not able or won't be able to join the live at the moment. Do it to tell them to go to our YouTube page, search Zenith, go to the YouTube page, search Zenith Bank and watch the recorded session. Also, this session will also be posted on our SME Learning Center. That is the our SME Learning Center, right? So please share with your friends, share with your loved ones. If you have questions, please do well to drop it on the comment section or the Q&A session. Our team are readily available to respond to you. Even while the speaker is going on, you have questions and you do not want to forget, you can just drop it. You have people attend to them. We would also be having poll questions at the end of the session. I'm sure our returning participants already know this. It's fastest finger. Don't be in a hurry to leave because there are exciting prizes for you to win after this session. So do well to stay, remain on the live, answer the questions, and stand a chance to win exciting prizes courtesy Zenith Bank. Now let's shift our focus to the theme of today's session, the bankable SME, structuring your business for sustainable financing in Nigeria. This topic speaks to one of the most critical challenges facing entrepreneurs today, access to funding. In a landscape where lenders are increasingly selective, SME must not only demonstrate potential, but also show strong structures, governance, and financial discipline. This session will help us understand what truly makes a business bankable and how SMEs can position themselves to attract the right financing for long-term growth. With that, it's my pleasure to introduce our speaker today. Our speaker today is Lolade Ajayi. Lolade Ajayi holds a Bachelor of Science degree in accounting from Covenant University, Otta. She is an associate of the Institute of Chartered Accountants of Nigeria, ICANN. In addition, she completed a postgraduate program in data science and business analytics at the Texas Markham Schools. She's a partner in the accounting and CFO advisory practice of KPMG Nigeria, with over 17 years of experience working with finance personnel to support and transform finance functions beyond the traditional roles of accounting for transactions and financial reporting to strategic business partnering. She has held strategic engagements across various industries and held leadership roles within client organizations, providing oversight that has been instrumental in transforming their finance functions. Her portfolio includes startups, emerging corporates, established indigenous and multinational corporations, as well as not-for-profit organizations. Lolade is an associate member of the Institute of Chartered Accountants of Nigeria and currently serves as the co-lead facilitator at the KPMG Accounting Institute, where she delivers executive training and capacity building initiatives for finance professionals and senior management. Beyond her core professional responsibilities, Lolade has served as a speaker and panelist at platforms such as Rise and Lead Women Africa and GAIA Africa, and has co-authored and contributed to thought leadership publications in accounting and financial reporting. Please let's give a round of applause for Madam Lolade Ajayi as she takes us through this session. Welcome, Ma. Good morning.
Thank you. Thank you very much. Thank you for the warm welcome and introduction. I'll quickly share my screen. Okay, please let me know if you can see my screen and also if I'm audible.
Yes, Ma, we can see your screen and you are very much audible.
All right. Thank you very much again for the warm introduction and good morning, everyone. It's a pleasure to be here. Thank you, Zenith Bank, for hosting this webinar. And thank you also our participants for joining this important session. I'll be speaking on the Bankable SME, structuring your business for sustainable financing in Nigeria. And I'll be going through the outline on what bankable means in a bank's credit process, how banks assess SME lending, structural pillars SMEs must build, the early stage versus mature SME readiness pathways, common reasons Nigerian SMEs get declined and fixes, as well as the bankability checklist. So let's paint a scenario where you walk into a room full of business owners or SMEs and ask what the one single thing is that is holding them back from scaling. It will probably be a unanimous response of access to finance. It's almost a chorus at this point, more like a universal frustration, which I can, understand. But because most businesses today have the products, they have the markets, they have the hustle, but the only limitation is the access to capital to scale. But today, I would like to reframe the conversation to say access to finance is not the biggest SME problem. The real problem is bankability. And bankability is not a corporate buzzword. It's more like a wake-up call to set up structured foundations that transform your business from one that needs capital to actually one that qualifies for it. It's a massive mindset shift from being a business that needs finance to setting up a structure that ensures you're a business that qualifies for finance. So before we proceed, today I would like us to take a quick poll to assess the current bankability position of our business. So Victor, please, can you put up the poll? The poll is basically structured around the key pillars that SMEs would need to get themselves compliant. The first is your business formally registered and fully compliant with CAC requirements? Please note that this is it's an anonymous poll, so feel free to answer honestly, and it's basically a self-assessment. So right now we have 28 people not registered, 28% people not registered. We have about 38% of our people or participants fully registered and compliant. 72 people have responded so far. Okay. All right. Okay, so we have 97 responders now. And I think we have a final poll. Okay. All right. So 23% of the participants on this call have not registered, while 22% have registered but filings are not up to date. 18% have registered and are compliant, but governance structures are weak. And then 38% are fully registered and compliant. Okay, so let's go on to the next poll, please. How do you manage your bookkeeping? And this is critical because to be able to get financing, you need to ensure that you have proper books of accounts in place and you're able to show a trend, a financial performance trend. So how do you manage your bookkeeping? Okay, so the results are coming in. I will just pause to have the complete view from participants before I read out the results. Okay. Have responded so far. I'll just give a second before we move on to the next. Okay, so we can end the poll and get the results. So from the results, we have 17 people that have no formal bookkeeping structure. We have about 59%, which have basic records but are not structured. We have about 9% that prepares the accounts, but just the annual statements only. And then 16% actually prepare monthly management accounts and up-to-date financial statements. All right, thank you very much. The third question, please. We're going to 6. Are your personal and business finances separated? This also speaks to the finance pillar or structure that you need to have for your business. Okay, so we still have about half the participants have responded. We'll just give it another second or two. And I love the honesty in the room because it just helps you assess where you are, and then it helps you know what you need to do to get to where you want to be. So I love the fact that, everyone is open to responding. I think we can end the poll now and get the results. Okay, so 18% have commingled transactions. 10% have mostly mixed transactions. 40% have separate accounts but occasional mixing, and 32% fully separated with clean transaction history. Okay, so there's definitely work that needs to be done. And as we go through the slides, we'll definitely see how we need to position ourselves better in terms of our finances. Can we go to quiz 4, please? How visible are your revenues through bank accounts? Do you operate a company or business that does mostly cash transactions? Are some of your transactions banked while some are cash? Do majority of your transactions pass through the bank? And almost all your transactions are traceable and documented. And it's okay if you have some transactions, cash transactions, as long as you ensure that they are deposited into your account so that there's a trail, there's an audit trail for your transactions. We can end the poll now. Okay, so it's good to know that 6% have mostly cash transactions, 30% have some banked transactions as well as some cash transactions. 34% have majority of their transactions go through banks, and 30% have almost all transactions traceable and documented. So that's an even split between the banked, majority, and all transactions. Can we quickly move on to quiz 5? Quiz 5, please. Okay. How leveraged is your business currently? And when we talk about leverage, we're talking about your borrowings. Do you currently have existing loans and obligations? Do you have multiple loans with tight repayments? Do you have a manageable structure facility? And then do you have a healthy balance between the equity, which is your contribution to the business, as well as debt? Okay, so we'll just give it another second or two for more responses to come in. Okay, can we end the poll? All right, thank you very much. So 17% have high informal debts, that is lending from family and friends. 11% have multiple loans with tight repayments. That could be micro lending, it could be commercial loans. We need to also watch that as well, because you don't also want to over leverage your business and struggle to pay back in the long run. 35% have manageable structured facilities, and 38% have healthy balance between equity and debt. Thank you. So for the final quiz, please. Oh, it's final. Okay. All right. So thank you very much. I will then quickly move on to the subject for today. And I would just like to say thank you for your honesty. Okay. Okay, the poll is up now. When applying for loans, how clearly do you define the purpose? So do you apply for loans for general use in terms of working capital? Do you also give rough explanations to it? Are there specific purpose but not structured repayment plans? And then are there specific purpose plus repayment plans plus supporting evidence? I mean, definitely, if you are going to a financial institution, definitely you need to have a structured purpose, a structured repayment plan with supporting evidence. But for borrowings and lendings from family and friends, very unlikely. For micro lendings, maybe some rough explanation here and there. For specific purposes, but not structured repayment plan, that largely might be also cut across both informal and formal lending. So we can end the poll now. All right. So 23% say they usually apply for general use. 12% say they provide rough explanations, very high level explanations. 16% say specific purposes but not structured repayments, and 50% actually do have specific purposes, a repayment plan, and supporting evidence. So I'd like to say thank you for participating in the quiz. Like I said, the quiz is just there to help you understand where you need to be and assess where you currently are and draw up a plan or an implementation roadmap for where you currently are to where you want to be. So most lending requests are largely declined due to business owners not being able to meet the bank standard as it relates to finance. And from the quiz, we've seen that in terms of finance, you need to have or provide financial statements or management accounts that highlight consistent and positive financial performance. From a governance perspective, most organizations or SMEs rather lack proper corporate structures that delineate its business from its owners. And then there's also the risk element to it, to say how transparent are your transactions. From the poll, we saw that a number of transactions are actually cash-based, while some are also passed to the bank. So it's important to ensure that there's visibility from a banking perspective. So in the event that you actually need to go to the bank for a loan, there's a audit trail or a transaction trace of your inflows and outflows from the business account. So in today's business, having a great product, delivering great service, or having a great vibe is not enough. There are key requirements to bankability. I would like to think of it as the price for admission, because without them, you aren't even in the game. And the first is predictability. Banks would like to see consistent, steady, and predictable trajectory, not the usual unusual trend. So today you have 100 million in terms of profit, tomorrow you have 50, next tomorrow you have a loss. They would like to see a steady flow of financial performance. So banks are not, when they get uncomfortable when they start seeing roller coaster performances. So we need to ensure that we are putting in structures to ensure consistent cash flows that will help the business over time. The next is institutionalization, which basically speaks to institutionalizing structures and systems that help the business run without the owner. You can't function as the CFO, the HR, the chief marketing officer as well, and still focus on business development. Is your business able to run in your absence? If your business is not, it's probably just a hustle. But a business typically relies on systems. And banks can't finance a single person's energy level. Banks finance systems. So how do we ensure that we are putting in place systems and processes that even when we are unavailable, even if it's just for a day, the business is still able to run and function at optimal capacity? And finally, we have the compliance, which is basically adherence to the regulatory framework. So do we have a structured legal entity? Are we registered under the Corporate and Allied Commission, which is the CAC? Do we exist as a business in the eyes of government? Can you sue or be sued? Are you paying your taxes and are your filings up to date? It is very critical that we ensure that we are compliant with regulatory requirements, because that is also what is being assessed from a lending perspective. And I'll wrap up this by saying bankability is disciplined foundation that transforms a business from needing capital to being worthy of it, basically being able to be qualified for lending. I'll quickly move on to how banks assess SME lendings. There are key questions that the banks typically ask to assess your financing eligibility. And the first is, who's the borrower? Is it an individual? Is it a legal name? Is it a business? Is it registered under CAC? Can I tie this business to a person? Is it operating actively under CAC? Because CAC maintains your position as either active or dormant. So the bank would need to know the owner of the business. Do they have directors? Is there a board of directors for larger SMEs? For smaller SMEs, is there an advisory oversight to the businesses? The next question is, what is the primary repayment source or cash flow, and how stable and predictable is it? For you to be able to access lending, you need to be able to show that you have capacity to pay back. So how are your cash flows structured? Do you have multiple pipelines for contracts and businesses that will bring in cash flow over the loan tenure? And how do we ensure that it is stable and predictable such that there are no fluctuations as to capacity to repay the loan? The next question is, what risks exist? So in the business in which I operate, the industry in which I operate, is the industry volatile? Are there FX concerns? Do I import products to actually sell in the Nigerian market? Are there FX concerns? Are there also new government regulations that guide my operation in the Nigerian context or economy? And what are the mitigants in place, for these risks? So there needs to be a clear documentation as to what risks currently face your business, and then what you need to do or what you are currently doing, to mitigate the risks, so that it gives our lenders the comfort that we have proactively assessed our business in terms of the risk implications, and we are working actively to mitigating the risks that present itself. The next question is, if cash flow weakens, what secondary security is available and is it enforceable? Now, we understand that life happens. Even in business, life happens as well. And sometimes our projected cash flows do not necessarily come in timely and handily. So do we also have a fallback plan in terms of an insurance, a collateral that can be called upon, in the event that our cash flows are not as coming as quickly as they should? So it's important that we are able to assess our collaterals vis-a-vis the loan amounts that we want for scaling, and that the collateral actually, the value of the collateral actually covers the loan request that we need. And finally, the last question is the proposed pricing, tenor, and facility structure appropriate for the borrower's risk level and loan purposes? Now, you need to be able to assess, where am I currently in business? What am I doing currently in business? And then what can I afford currently in business? Now, in assessing that, that would help you determine what sort of financing you need to take you to the next level. Of course, given your current operational capability as of today. And then it will also help you assess what tenure you would need and how flexible you need your repayment plan to be able to structure something that works for both the bank and yourself at the end of the day. So it's important that we look at where we are and where we want to be and how we want to get there in terms of flexibility of payment to be able to present that case to the banks for lending. I'll move on to the banker's decision lens. And why do I structure it this way? It's important that we put ourselves in the shoes of the banks to say, what do they need to see to assess their ability to give me credit? And I've coined it as the 6 C's of credit. The first is character. In banking, character is data and not personality. Character basically speaks to your credit history and your financial integrity. So have you borrowed or lent money in the past? Have you defaulted in the past? We know that there's a credit bureau in Nigeria that tracks loan defaults as well as loan repayments. So if you have ever defaulted in the past, it will be highlighted in the credit bureau. So it's important that we ensure that we maintain financial integrity at all times. If we have accessed a loan in the past, we need to ensure that we fully complete that obligation before we move on to the next financing for our business, because the banks will have a difficult time lending to you when there's an existing obligation that hasn't been cleared. The next is capacity. I've spoken about capacity before. I've said, do you have capacity to actually finance this loan and run the loan? So if you, for example, if you earn 1 million monthly and your loan financing from a principal and interest repayment point of view is 800,000, that means you have 200,000 to finance the rest of your operations. That doesn't demonstrate capacity. So you need to be able to assess your current cash flows and turnovers and say, what do I currently have? What am I making based on the estimates I have over the month? And which is why bookkeeping is very necessary, because it helps you see at a glance the trend. And then you need to say, what do I need for now? And what can I afford to pay over time? And that way you're able to assess your capacity for your current request and then what you need to do to get to where you want to be. The next is capital. And this is where the bank assesses your skin in the game. Basically, are you putting your money where your mouth is? You can have a business idea, great business idea, and you're implementing, but if it's not backed by your capital, it's as good as saying that you want the bank to finance your business, which the banks will typically shy away from, because they also want to see that you are committed and you're also invested in the business. So you need to ensure that you are not undercapitalized, which is basically ensuring that you have enough of your funds in the business to be able to run the business. And then you can then go ahead and reach out for lending opportunities, to scale up that business. The next is collateral. And this is also a secondary mitigant, as I've said before. It's just a fallback plan. The real primary reason why a loan will be approved is based on your cash flows. But like I said, life happens. Even life happens in business as well. So do we have a fallback plan to ensure that whatever happens, we're still able to cover the debt position and sufficiently close it out? Collaterals are basically safety nets and not the real engine. The real engine itself is the cash flow, which we'll be talking about as we proceed. The next thing to consider are the economic factors and conditions surrounding the environment in which your business operates in and the specific request for the loan. So basically, are there new regulations guiding your businesses? Do you need to consider the new regulations in your business? What's the inflation rate like, and how does that impact your business from a cost of sale perspective? How does it impact your business from a cost perspective, as well as even the revenues that you're generating? So you need to be aware, of the environment and the conditions in which your businesses are currently operating in, to be able to take active steps as to what you need to do when you need to seek for a facility. And finally, the engine, which is the cash flow. The cash flow is basically what the banks need to assess, for them to be able to approve any lending requests. And cash flows are not promises or potentials. Cash flows are actually matrices for survival. So does your business have sufficient cash flows to meet its short-term obligation as at when due without timing mismatches? Can the banks lend against your repayment capacity? If not, you may need to be able to build a stronger pipeline for your businesses as you grow so that you're able to access, more funding to scale your businesses. I'll quickly move on to the structural pillars SMEs must build. And I'll start by saying for SMEs to thrive sustainably, it is essential to establish a strong organizational foundation. And this is built on the 6 pillars I have highlighted to the right. These pillars translate into practical actions that ensure resilience, growth, and long-term success. So I'll move on to the legal and corporate structure, which basically makes the business lendable on paper and in law. And what do we need to do to ensure that we set up a proper structure? We need to register our business under the CAC. You need to be seen as a legal entity. You need to be able to keep your annual filings up to date on CAC. If your business requires some form of licensing, you need to be able to get the licensing and track annual renewals so that at any point in time of your business, you're not out of license. You need to have a clearly defined ownership and structure for your business. So for the larger SMEs, do you have, the board of directorship? For the smaller SMEs, do you have an advisory oversight? Do you have authorized signatory mandates? Do you have segregation of duties in your business? So one person cannot complete a transaction at the end of the day. So if the accountant initiates, then the owner or the CFO approves, subject to the delegation of authority limits. For the larger SMEs, do you have a formal governance structure through consistent board minutes and documented resolutions? Because all of these provide supporting documentation or evidence to show that you are actually a legal entity and you can borrow as a legal entity. Also, is the future of your business secure? Meaning that, do you have contracts for customers, for lease contracts? Do you have contractual arrangements that actually show evidence that you have the ability for future cash flows? It's important that we have our structural integrity intact through our CAC registration, up-to-date annual returns, our tax identification numbers, as well as industry-specific licenses. How your business is structured also affects your financing. And we have 3 major categories of business structures today. We have the sole proprietor / registration under a business name. We have the partnerships, and then we have the limited liability companies. And for each of these categories, your ability to get financing is restricted. So for instance, for the business name, the bank sees a business name as an individual. So beyond the fact that there's really no legal separation between the owner and the business, there is unlimited personal liability. And because of that, the size of facility that you might be able to get might also be limited as well. The banks will heavily rely on your personal credit history. So they're not just looking at your business name, they're also looking into your personal credit history life and assessing your account conduct as well. There's also a higher continuity or succession risk with a sole proprietorship business as opposed to a limited liability business. For partnerships, it's basically slightly upgraded than sole proprietorship, and you're able to access medium, facilities as the case may be. But you also need to present your partnership deed, as well as the fact that for the partners in a business, your credit histories will also be assessed as well. However, for a limited liability company, you are a separate legal entity from the owners of the business. You are able to demonstrate stronger governance perception and continuity. You have board resolutions and the necessary documentations that you need to show that, one, you're a legal entity and that you have capacity to finance the loan. And then and also the banks also evaluate the limited liability companies based on cash flow as well as the risk structure as well. So, but however, from a limited liability company perspective, you have more access as opposed to the other two structures. But does structure really guarantee funding? I would say the key principle is structure improves your financial ceiling. It improves your chances of actually getting financing. But what guarantees your actual ability to get financing is your repayment capacity. So structure helps you achieve a legal identity and authority to borrow. It helps you better your governance and continuity signals. It helps you keep yourself accountable from a financial reporting perspective. However, what determines the approval for lending is your documented cash flows, your risk exposure, your credit history and account conduct, as well as the purpose and the tenor for your loan. So it's important that while we have structure and we're building structures in mind, we need to focus on what is also important, which is the business development and ensuring that we have robust cash flows to be able to support financing the lending. I'll move on to the financial structures and record. And basically, I would like to start by saying if it's not documented, it won't be financed. From the poll, we could see that a number of us do have some form of accounting being done. Some have management reports, others just have some level of accounting. So it's important that, one, we do not commingle transactions. Now, I mean, and I would say it's easier said than done. As a business owner, sometimes you have an urgent personal finance need. The only money that is easily accessible to you is your business account. So you just quickly settle the obligation. It's important to remember that if we do borrow at all from our business accounts, we need to refund it back and properly account for that transaction. It's not best practice or leading practice to do that, because at the end of the day, you don't want to commingle transactions so that you don't have reconciliation issues. And then you now have to start explaining the substance of the transactions to the banks as well as to your auditors. So it's important that we keep those transactions separate, your personal account from your business account. It's also important that in setting up a finance function that will produce management accounts, we need to establish the financial reporting framework. And what does that mean? You need to be able to document accounting policies and procedures that will guide transaction processing and treatment. You need to be able to set up chart of accounts, which actually guides posting of transactions. And it has to be in line with IFRS as well. And I know some businesses will say I don't even have accounting softwares. There are some other, web-based tools or app-based tools that can actually help you do some level of accounting to ensure that you know what your financial performance is over time. There are also some small boutique accounting softwares that a number of businesses also use to help them track transactions and manage management reporting on a monthly basis. So it's important to set the foundation right, and then you then do your monthly bookkeeping on a monthly basis so that you are able to assess your performance and you're able to show and demonstrate persistent and predictable financing to the bank as well. So they are able to see the trajectory of your growth. You need to maintain 3 core statements. The statement of comprehensive income, which is your profit and loss. This basically highlights your turnover, your cost of sales, as well as your expenses to give you your net profit at the end of the day. So what is turnover? Basically, revenues generated in the business. What is cost of sales? The cost that I use or I incur to generate that revenue for the business. And then other operational expenses like fuel, phone bills, data, and the likes of it. So it's important that we're able to segregate, understand the elements of the cost statement of comprehensive income and segregate our transactions accordingly. So in presenting your management account, you are able to present a clean and clear position of your financial performance in terms of gross turnover and profitability at the end of the day. The next statement is the balance sheet or statement of financial position. This basically shows your financial performance as at a given period, which is basically your assets, your liabilities, and your equity. So does my business have assets? Is my car that I use for my business registered in the name of the business or in my name? If it's in my name, it cannot be a business asset. So you need to ensure that your assets are in the name of the business and they are highlighted in your balance sheet. A sizable asset structure can also help the bank, determine the level, of loan facility to provide to you at the end of the day. And more importantly, the cash flows. This basically shows cash movements, during the period and basically what you have at the end of the reporting period to be able to finance the loan as the case may be and to run your business as well. So those three statements are important, to be able to show evidence that you have a transaction history, you have a performance history, and you're able to meet your obligations as at when due. Financial discipline highlights that you should have 3 years audited financial statements. And for the early stage SMEs, we understand that you might not have that, but it's also important to have your monthly management accounts. You need to have a dedicated corporate bank account that shows the inflows and outflows from a business perspective. You also need to ensure that you do proper bookkeeping so that you are able to assess your actual and accurate financial performance at any given point in time. And then, of course, have a clean credit bureau report. So if you have an existing obligation, please do endeavor to fully liquidate that obligation so that when your request for facility is being assessed, it's clear that you are actually paying and that you have not also defaulted as well. The next is cash flow visibility and stability. I've mentioned that cash flow is what determines your ability to get access to financing and not necessarily turnover. So it's important that there is an audit trail and there is something that highlights or shows your banking transactions, because at the end of the day, if you are going for a loan with the bank will first of all look into your account to see what sort of transactions you have there. Are your transactions passed through the bank or they are still cash heavily operated? And from the poll, we could see that, about 6% were still, cash, but a number of us had in and out in terms of cash as well as banking. So it's important that we pass our transactions through channels that show verifiable banking evidence so that it's clear that you have a transaction history and that you can show that based on the transaction history, you have the cash flows that will be able to meet your short-term and long-term obligations as they fall due. Going through ensuring cash flow visibility also helps to eliminate cash leakages within your accounting cycle. So for instance, rather than getting cash revenues and not depositing into the bank and then also paying, you might lose sight of that transaction as opposed to if it had gone through the bank and if you had paid through the bank as well. So that way you're able to see your bank statements and actually recall what transaction happened, and you're able to recall what the monies were spent on as well. So it's important that we have a structure or a source document for which we ensure that our cash flows are visible. Banks lend against cash flows and not on promises. So it's important that that documentation and that paper trail is there. In terms of capital structure discipline, I've mentioned that banks favor the skin in the game. So in terms of your business, what is your own commitment to the business? Is it formally documented? Do you have your paid in capital? And is it from as part of the incorporation, was it done on the CAC documentation? How leveraged is your business? So do you currently have existing loans? And what is the ratio of your loans to your equity? Is it balanced or you're over leveraged, which means that you have more loans than even the equity that you've put in? But the banks assess where you put your mouth. What they say, you put your money where your mouth is, basically. So the bank assesses your own financial commitment to your business in order to assess what sort of facility you get at the end of the day. So is it also important that even as we make this money in terms of net profit, we are also plowing back to the business so that we can scale at the end of the day, because you don't want to take out your profits and then the business is also struggling over time. So ensure that you're plowing back your profits into retained earnings and the business is growing based on that. The next pillar is credit and reputation management. And this basically speaks to your account conduct, your credit history, your financial integrity. And it's important that we maintain strong account conduct by preventing return instruments and habitual excesses on facilities. So do we use micro lenders? Do we use commercial banks? Are we ensuring that we are closing out those existing relationships and not over leveraging? It's important because, like I said, there are records to these things and banks have access to these records. So if you are over leveraged, they can see it. So it's important that you manage your leverage. For existing obligations, you have proper records for it, and that you can show the systemic repayment of outstanding obligations as well. It's important to have a clean credit status at the end of the day, and that way that gives the banks confidence to be able to lend businesses. And finally, you need to have a purpose-driven borrowing. So it's not enough to say, I want to borrow for working capital purposes. What is working capital? You need to be able to say, this is what I want to borrow for. This is what my business is into. I want to borrow funds to expand my business by acquiring these assets. This asset is going to be able to generate future cash flows of this, which will then form the basis of repayment of my loan to the bank. So everything needs to be tied and it needs to be documented. So you need to be able to determine what the use of the fund is, what the impact to the business is, and then what the primary repayment source is. Everything needs to be tied in a sequence so that it's explainable. Vague requests create doubts, And where there are doubts, it limits your ability to get funding from the banks. So you need to be clear. There needs to be that you need to be able to show the source of repayment. You need to be able to say, this is what it is, these are the numbers, and this is how I intend to pay back. It needs to be clear and structured. So at this point, I want us to do a reflection to say, do we actually have management accounts that can serve as evidence of our financial performance over time? And can this be presented to the banks? Our revenues traceable through the banking platforms, or we're still operating on a cash basis? If we're doing that, we need to change our strategy. And then we also need to assess, have we reviewed our credit profile over the last 12 months in terms of what business we've done with micro lenders and commercial banks, and whether we have fully satisfied our obligations or currently financing it. And we need to also ensure that we're not also over leveraged. So funding readiness begins with self-awareness. So we need to be aware first, and then we then need to work as to what we need to do to ensure that we have a clean financial history and that we can also prove the same to our lenders. I'll quickly move on to early stage versus mature SME readiness pathways. And basically, if you have been in operation between 0 to 3 years, the level of documentation required will definitely be different from those who have been in business for over 3 years. It basically speaks to the critical stages of SME growth and what banks look out for. So from a funding perspective, your goal should be, to be able to satisfy some working capital needs here and there for the early stage. However, for the mature SMEs, your goal shouldn't be working capital, because your business has already been operational. And if you have been plowing back your profits, you should have some sufficient amount of money to run your business. So you should be looking at expansion and basically capital expenditure and investments. So what is your funding goal from your early stage and your mature stage? You need to be able to assess that. From a financial record perspective, the banks for smaller SMEs would like to see your 12-month bank statement at the minimum, including your internal management accounts. So it's critical that we do our bookkeeping on the monthly basis, and we have management accounts that show evidence of financial performance over time. But for larger SMEs, you would need to have audited accounts at the end of the day, at least 3 years, in the 3 years that you have been in operations. So that way you're able to show that beyond your financial performance has been audited and ascertained that it shows the true and fair view of your financial position, which is where audit comes in. From a governance perspective, for larger SMEs, you need to have the board of directors that also guides the business. While for smaller SMEs, even though it's founder-led, there has to be some form of advisory oversight to ensure that they are holding you accountable to your business as well. You also want to be held accountable, actually, because that way you are able to monitor your progress, your strategy for your business, and how you're implementing it. And then finally, for the early stage SMEs, usually the banks will require some personal guarantee or some level of collateral, while for the larger SMEs, you will need, more substance in terms of either proven cash flows or some form of other collateral for your business. Now, moving on to the common reasons why Nigerian SMEs get declined. And from what we've said over time, it's clear that if you have weak or inconsistent financials, or you're not even able to project or present financial statements, it is very unlikely that you get that approval. So it's important that we keep simple, regular books and ensure our numbers are aligned. You don't want a situation where you've provided a management account for February with January comparative, and then when you actually look at your January comparative, the numbers are different. So you need to ensure that you're keeping proper books of accounts. You also need to ensure that your transactions are traceable through the banks. You also need to ensure that you're not commingling personal transactions or personal funds with business funds. So that way you are able to separate the business from the owner, and you're able to show or demonstrate cash flows from an inflow and outflow perspective. The purpose for your loan needs to be clear. I've mentioned that a vague explanation will not work. You need to be able to show that you need the funding to expand on your business. You need to also be able to show the numbers and how the numbers will attribute into a future cash flow for the business that will be used to settle the eventual obligation. You need to ensure that you're not also over leveraged. If you have multiple obligations, try as much as possible to settle them, and be able to show evidence that you are currently financing them without any default. So it's important that it gives the banks some level of comfort. And finally, governance documentation. So we need to ensure that we have the right documentation from a statutory reporting point of view, from contracting. So we do contracts with customers. It's not word of mouth. It needs to be documented, and that shows evidence of future cash flows based on what has been documented and signed in your contract. So there needs to be some form of formal documentation which is accurate and accessible. I will wrap up by just highlighting what your bankability checklist is, some things that you need to know or some things that you need to have. So this is where we want to be basically. So as I'm going through these 4 checklists, let's do a self-reflection to say, what do I currently have and what do I need to plug in, to plug in the gaps and loopholes to ensure that I am bankable. The first is up-to-date statutory records. So your filings have to be up to date. Your licenses have to be up to date. You need to have up-to-date board resolutions, minutes of meetings, and you need to be able to show proper business structure, valid operational documents, so updated contracts, signed contracts, both parties have to sign. Permits and licenses have to be updated. If it needs to be renewed on an annual basis, please keep a calendar monitor to ensure that you update, when due. Clear internal controls. There has to be a clear approval process, authorized signatories to the business accounts, spending rules and regulations, basically your delegation of authority framework, what you can spend on, the limits to what you can spend on. And it just basically shows sound governance practices. And then consistent financial evidence. Basically, do I have statements of account? Do I have management reports? Do I have audited financial statements? Am I compliant with tax regulations? Are my bank statements truly reflecting my inflows and outflows to the business? Basically, ensure you have financial evidence to support your loan request. And I'll just summarize everything I've said today to say bankability is structure with financial transparency and repayment capacity. You need to be able to put a structure in place. Your structure and your business transactions need to be transparent. And then you need to be able to project and show future repayment capacity to be able to access financing from banks. Banks primarily lend on cash flows, which is important. Collaterals are secondary mitigants. So the important thing is to have a solid pipeline for cash flows and existing cash flows as well. An effective financial oversight cannot be overemphasized. You need to ensure that you are able to present your financial performance and it is credible and consistent. Early stage SME transactions early stage SMEs should build on transaction history and start smaller, while more mature SMEs should deepen their governance, audit readiness, and working capital discipline. And finally, SMEs improve financing outcomes by following the 6 pillars, which is formalizing yourselves legally, keeping credible financials, showing stable cash flows, maintaining healthy leverage, preserving good credit behavior, and borrowing with clear purpose and structure. The goal is not simply to obtain a loan. The goal is to build a business that banks compete to finance. So in building our structure, in assessing lending, let's ensure that we build our structures and then we're able to show performance so that it will be easy for us to get lending. Thank you very much for attending this webinar, and I'm happy to take questions. And I'll hand over to the moderator. Thank you.
Very much. Thank you very much, Madam Ololade. This was really a full-packed session.
Thank
I'm
you.
sure that the participants have learned a lot already. In fact, in the comment section, we want to know what you have learned from this session. Just drop some pointers, drop some things you have learned from this session in the comment section or the Q&A section. We want to be sure that we are paying attention and we really, got a thing or two from everything she has said so far. Thank you. Thank you. I mean, I know our participants already know what to expect when they come for these sessions. They know that we invite the best. So today's session was really, really impactful. Thank you very much. I'd just like to reiterate some of the bank's decision lens that you stated. The 6 C's. I'm sure some of us or a lot of us, if we paid attention, we really got it. And one thing I really want to, emphasize on is character. You really spoke to it. You told us that the character is not is not about our personal self, right? It's your business. What's the character of your business? I mean, you cannot go and borrow loan from one person today and then you borrow from another person tomorrow and expect that when you come to the third person and you get it easily, right? There's the credit check that is done. There are lots of things that they check before loans can be given to you. So please check your character. Check the character of your business before you go to another lender to request for more funds for your business. That's like one key thing we really need to work on in 2026. Also, she said something, you need to separate your business account from your, personal accounts. You cannot use your personal account to be running your business in 2026 now. No, now. We say this all the time. We've had sections like this where we reiterate the importance of you having a separate account from your business. You need to do that this year. For those of us, we saw the poll that she put up earlier, where some people were talking about how you use your cash. Most of your transactions are cash based, right? Not in 2026. If you're looking to, grow and, get sponsors to, take your business to greater heights, you cannot be using your business account, your personal account as your business account, not in 2026. Let's change. If we fall into this category of people that are doing this in 2026, let's change. Thank you again. Thank you so much, Madam Lolade. This was really, really impactful, and I'm sure that a lot of us have learned a thing or two and would implement when we leave this live. Thank you again. So moving on, like I said earlier, don't be in a hurry to go. For those of us that join this session, we know that we always have two speakers, right? So the next speaker is one of us. His name is Mr. Henry. He'll be taking us through some types of loans that we can, you have access to and they are readily available for you to access at competitive rates. So don't be in a hurry to leave. Stay back and get a thing or two and just pick. By the end of this session, you should be able to know which of the types of loans you'll be talking about will you can harness and come get and grow your business. Thank you once again, Mr. Henry. Over to you, please. Okay, really sorry for the break. I would just like to, read out the profile of who is coming to speak to us today. Like we always say, we bring the best to the platform. We bring best the great hands, to speak to us. So just a brief introduction of our next speaker. Okay. Our next speaker, like I earlier mentioned, is Mr. Henry Awa. Henry Awa is an experienced credit management professional recognized for his ability to enhance operational efficiency, strengthen customer satisfaction, and ensure compliance with regulatory standards. Over the years, he has led several process improvement initiatives and training programs that have reduced turnaround times, improved productivity, and contributed to stronger client relationships. Henry's core strength span across credit control, disbursement operations, and branch operations conditions coordinations, I beg your pardon, where he has consistently delivered measurable results. He is known for his strong leadership style, his commitment to teamwork, and his focus on creating an environment where people can perform at their best. Throughout his career, Henry has played a key role in coordinating cross-functional projects, improving workflow structures, and supporting the smooth execution of operational strategies. His practical problem-solving skills and dedication to continuous improvement have contributed to the success of the teams and organizations he has served. Is a licensed and certified fellow of the Institute of Management Consultants, Nigeria, FIMC, the, the National Institute of Credit Administration, FICA, the Chartered Institute of Loan and Risk Management, Nigeria, FCILRM. Henry is also proficient in Microsoft Office tools, including Excel, Word, and PowerPoint. With that being said, a round of applause for our next speaker, Mr. Henry Awa. Thank you very much once again, sir, for joining us. Please, over to you.
All right. All right, good morning. Thank you so much for that introduction. All right, good morning. Thank you so much for that introduction. I'm just take the next few minutes to speak to us about our retail loan offerings. Thank you so much to my first speaker. My first speaker has really helped me, has made my work easy this morning. So I'll just quickly go straight to our loan offerings. Aside of our corporate loans, we have a lot of loans that are available for SMEs. I'll just be speaking on 3 of them this morning. These loans are very affordable loans. Taking the cue from the first speaker, I'm just going to let public know that we have 3 good loans amongst others that we have that are very affordable for our SMEs. First is the SME loans. These loans are available to finance small and medium enterprises. They're actually available to all business sectors. Now, how do you become eligible to access this loan? You have an account with Zenith Bank. Make sure that your business is onboarded on one of our e-channels. We have several e-channels. It could be corporate, internet banking. It could be just for you to have the SME card, for you to have to be on our mobile banking. We'll just talk briefly on the documentations for this loan. Like we said, these loans are at very affordable rates. at a maximum amount of 20 million. So you can access up to 20 million for your businesses. We just remember these loans are non-collateralized, so that's the benefit of this loan. As an SME, you don't need to go and get land or landed property for collateral, or even get a fixed deposit or any form of cash as collateral. So these loans are non-collateralized. We just ask for minimal documentations like a board resolution. We want to ensure that you domicile your business proceeds. My first speaker mentioned the 6 C's of credit, which includes character, capacity. We want to be sure that you can pay back the loan. So that's why we're saying you should domicile your business proceeds to Zenith Bank. We also ask for GSI. GSI is just a tool where we say, oh, if peradventure the loan goes bad, you can also recover from other financial institution where your account is domiciled. But we don't pray it gets to that stage. We'd also request for a credit life assurance. Credit life assurance is just an insurance on the business promoter. The business promoter is the owner of the business. So these are just little documentations that you need to provide to access the SME loan. Then we'll also talk about the Z Woman loan. Now we're talking about financial inclusion for women today. So we've structured a product for women, and we're saying that women in the SME space can come and access loan up to 10 million naira. So whatever you're doing, we want women that own businesses, even if it's just 50% of the business. Now, the unique structure of this loan, for us to be sure that this business is owned by you as a woman, we'll just ask for the CSC document to see what the capacity of ownership you have in this business. And what we're asking for is a minimum of 50%. So either you own the business fully or you own up to 50% of the business, you can access the Z Woman loan. Somebody will ask, why would I not just go for the SME loan instead of, why should I come for the Z Woman loan and not the SME loan? So the Z Woman loan is coming at a more affordable rate. So that's the cash. That's what will attract you to access the Z Woman loan. Moving on, we also have a BOY loan in collaboration with Zenith Bank. We're offering loans up to 5 million at a single-digit interest rate. And for you to come on board, for you to access this loan, you at least have relationship with Zenith Bank. You can access this loan. The same criteria. Make sure your business is onboarded on any of our channels I mentioned before: corporate internet banking, be on our mobile app, or have our SME card. And with just these few documents, you can access the BOY loan. And for the BOY loan, we'll make sure that it's something you can get instantly. Once you walk into any of the Zenith Bank branches, sending your application request letter, and the account officer will take it from there. And trust me, these are loans you can access between 24 to 48 hours. So we'll take questions in the comment section. Please feel free to drop the questions in the comment section, and we'll take it up from there.
All right. Thank you very much, Mr. Henry. Thank you so much. So the reason why we did this is because we get a lot of people saying, Zenith Bank does not give out loans. Zenith Bank does not give out loans. I'm sure by now you already know we have a lot of loans for you. All you just need to do is position yourself, walk into any of our Zenith branches and tell them, oh, I want the Z-Woman loan, or I want the BOI loan, and it will be made available for you with all your documentation, of course. So I believe after now, we are aware, we know that there are loans for you to access from Zenith Bank. Thank you again, Mr. Henry. I'd just like to say I've seen a lot of hands raised, Please, we do not we are not really taking live questions. So if you have questions, just drop it in the Q&A section, and trust me, your concerns will be attended, your questions will be answered. Thank you, thank you, thank you once again. Thank you to our speakers. Thank you, Mr. Henry. Thank you, Madam Ololade. Before we continue, I promised us that there will be the poll questions where we get to win prizes. So I'm sure a lot of us have been waiting for this moment, so it has finally come. So remember, it's fastest finger. There'll be some questions popping up on your screen shortly. First, there'll be 5 questions that will be asked, 3 for the Zoom listeners and 2 for our YouTube listeners. So please, fastest finger. Again, there are prizes to be won, exciting prizes courtesy of the best bank in Africa, in the whole wide world, Zenith Bank. So please, watch out. The questions are coming up right now. We'll be taking the ones for the Zoom listeners at the moment. So Zoom participants, get ready. 3 questions are going to be coming up on your screen shortly. So, okay, we've added one more question to it. So there'll be 4 questions for our Zoom listeners. So please pay attention to the screen and answer as quickly as possible so you stand a chance to win the prizes. Also, I think we need to know or note that to be eligible for these prizes, so for if you perchance you win or you get the questions correctly or you are the fastest person to answer, please ensure that you already have a Zenith account. But if you don't have, don't worry, we've got you covered. Just walk into any of our Zenith Bank branches, open an account, fund it, and your gift prizes will be, way billed to you or dispatched to you. So again, you need to have an account with us to stand a chance to win. So if you've won already, if you answer the questions correctly and you do not have a Zenith account, do well to walk into any of our branches, nationwide, to get an account for yourself, and of course your gift will be dispatched to you. So the questions will be coming right up. Again, there are 4 questions for our Zoom listeners, so fastest finger. The question 1 is up already. Which of the following is the biggest structural red flag to a tier 1 bank? Which of the following? Oh, I'm seeing responses already. We're really sharp. We're ready to win this. If you haven't seen it, I don't know. If you haven't answered already, I don't think you should bother any longer because someone has already won. But just give your response. Would welcome them. So which of the following is the biggest structural red flag to a tier 1 bank? Okay. Thank you. Thank you for your responses. We're moving on to the second question now. Remember, it's fastest finger. So the second question is up. What is the Zenith Bank's product designed specifically for women? What is it called? That product designed specifically for women. What is the name of that product called? The loan product designed specifically for women. What is it called? Is it the SME Grow My Business? Is it the Z Money Business? Is it the Z Woman or Prestige? What is the Zenith Bank's products designed specifically for women called? Is it the SME Grow My Business, Z Money Business, Z Woman, or Prestige? I'm seeing responses. I see that a lot of people are paying attention. I'm liking what I'm seeing. Keep it up, keep it up, keep it up. Okay, so we'll be moving on to the third question now. What does a strong purpose-driven loan request include? What does a strong purpose-driven loan request include? Is it a general request for working capital, a detailed use, that's B, a detailed use of funds and repayment plan, C, a request based on competitor activity, D, a loan amount based on personal comfort. What does a strong purpose-driven loan request include? And last but not the least, the last question for our Zoom listeners. Thank you very much for your responses. I'm saying that we're really active. May the best man win or best woman. So our fourth and last question is, for early stage SMEs seeking financing, the most critical first step is, so what is the first step for an early stage SME seeking financing? A, is it requesting a large term loan? B, is it building a 6 to 12 months of visible transaction history? C, is it offering collateral immediately? Or D, expanding into multiple markets? So bring in your answers, give us your responses. All right, so that's about it for the poll question. Like I said, may the best man or woman win. Stay back, would like to take your questions now, but before then, we'll be going on to the YouTube listeners. Yes, your questions will be up. YouTube listeners, please pay attention to your screen and answer the questions as fast as possible so you can stand a chance to win the exciting prizes that would be giving you, again, courtesy of the best bank in the whole wide world, Zenith Bank. All right, so as our YouTube listeners, I hope you're seeing the question. So please do well to answer. So while we, wait for your responses, we would like to just move on to the Q&A section now. We're moving on to the Q&A section now. So we have questions for our speakers. All right. Madam Lolade, please confirm you're still with us and you can hear me because this set of questions are for you. Can you hear me, Ma?
Yes, I can. Can you hear me?
Okay, yes, I can hear you now loud and clear. Thank you very much, Ma, for staying behind. Okay, so I don't know, would you like me to go over all the questions or take them one at a time?
Okay, can we take them maybe 2 or 3 at a time?
Okay,
Yeah.
that's good. So we have 4 questions for you, so I'll just take them two. All right, so the first question is, how does the requirement needed to be met to secure loans differ from those requirements when what we need is finance? Example, export finance. So how does the requirements needed to be met to secure loans differ from those requirements when what we need is finance? The second question is, I am about to start my SME business. What are the first things I'm to do? What are the first things I'm to do as I'm about to start my SME business? Over to you, ma'am.
Okay, thank you. To be able to access finance, the baseline requirements are the same. You need to be able to show your financial performance, your financial records. You need to be able to show that your business is a legal entity and is registered under the CAC. Beyond the fact that it's registered under the CAC, your filings, your annual filings need to be up to date. You also need to be able to show that you're a tax-abiding citizen. So the basic baseline requirements are the same. Now, what the financing element to it will determine what sort of information requirements you need. So if it's an export finance, it probably be in relation to what you're exporting, your cash flows, FX risks, and a number of them. So it's subject to what exactly you need it for. Best bet would be to reach out to the facility organization to request for the information requirements. And then on that basis, you can get a comprehensive list and you are able to work towards meeting the requirements that is being provided or requested for. In terms of the new SME starting a business, I think the first thing you need to do is to be able to put a legal structure to your business. So what do I mean? You need to register your business under the CAC. Once you have that registration, that will be the first step into what next you need to do. But it's important that you have to have a registered business. You need to be able to open a bank account for the business so that you don't commingle transactions, your personal transactions from your business transactions as well. And then you can go ahead to operate business with that account. The third thing to do is to set up a finance structure. So depending on what you are using to account for your transactions, is the tool, can the tool be integrated to your banking platform such that as your transactions get into your account, you are able to see them on your tool? If not, are you able to maintain or get a small boutique tool for your business that can help you capture transactions? So you need to look at it from a structure basis, from a legal structure, from a financing structure as well, which is basically opening your bank accounts and your bookkeeping, and then we can take it further from there. It's important to keep original source documents. So ensure that you have your source documentation for your invoices, for your expenses, because at the end of the day, you also need to be compliant with taxes as well. And these documents will be asked for, requested for in the event of a tax audit. So you need to keep proper books of accounts and keep proper documentation as well. Thank you.
All right, thank you very much, Ma. Just please wait there, and we have other questions, but we'd just like to take 2 more questions for Mr. Henry. So, Mr. Henry, the next set of questions are for you. What are the requirements for the Zenith Bank SME loan? What are the requirements for the Zenith Bank SME loan? And the second question is, are loans available for a very new business that needs capital to begin? So the first one is, what are the requirements for the Zenith Bank SME loan? And are loans available for a very new business that needs capital to begin?
I said, you can refer to them, tell them that it's not.
All right, thank you very much. I'll take the first question. Which says, what are the requirements for the Zenith Bank SME loan? All right, so you just walk into any Zenith Bank branch with your request letter, then you provide a board resolution, a letter of domiciliation. I explained earlier during the presentation that letter of domiciliation, you're saying that you're domiciling your business proceeds with Zenith Bank. Remember, you're paying from your business proceeds. So that's why that letter is actually very, very important. Then also you sign a letter of GSI, Global Standing Order, that would only apply when there's a default. Remember I said that we don't pray for that. We don't pray for any default, but in case that happens, that's why we required you to give us sign that GSI letter, Global Standing Instruction, so we can recover our funds from any financial institution where you have an account. Then we also ask for a credit life assurance policy. That is just to protect you. It's an insurance on your life to protect you. And that's what that policy document does. That's the cover. Then we also ask for personal guarantee from you. And I also said you have to be onboarded on, your business has to be onboarded on any of our e-channels, which includes the corporate internet banking CIB, or you have our mobile banking, or you have an SME card. So that's it. That's the response to that first question. The next question was, are loans available to very new businesses that need capital to begin? From the 6 C's of credit, remember the first speaker, she mentioned character, she mentioned capacity. She also talked about turnover. She also talked about cash flow. And for loans to our SMEs, remember we have to review your account statements. We want to see how well your business is doing. And remember, these loans, they are non-collateralized. We're not taking any tangible collateral from you. So if, for example, you have turnover in other banks, in other financial institutions, is welcome. We'll take it and we'll review your cash flow, your turnover based on that, and we'll lend to you based on that. So we want to see what you've even done. How viable is your business? So we don't just do experiments with shareholders' funds and give money to a business that we are not sure of. So if you have turnover in other banks, in other financial institutions, please, you can also submit them for us to review, and we'll lend to you based on that. Remember the limit we said for the SME loan, you can access up to 20 million. For the Z-Woman loan, you can access up to 10 million. And for the BOY loan, you can access up to 5 million at very affordable interest rates. Thank you very much.
Thank you very much, Mr. Henry, for those responses. I believe that the people that asked it have gotten clarity on it. So the next set of questions are for first speaker, Madam Lolade. Ma, please let me know when I can go ahead and read the questions.
You can go ahead.
Okay, so the next question is, how do I handle the portion of my profits that I want to use for personal purposes? How do I handle the portion of my profit that I want to use for personal purposes? And the next question is, would penalties apply if government documentations, just a second. Would penalties apply if government documentations are not met due to low cash inflows to the business over a particular period of time? So those are the two questions, ma'am. I don't know if you got it or you'd like me to go over them one more time.
No, it's fine. So the
Okay.
first one is about how do you pay yourself from your business? Again, you are a business owner / employee of a business. So yes, you are entitled to some level of pay from your business. So you need to be able to assess, what will be determined as a sufficient remuneration for you in line with where your business is currently at, so that you're also not overpaying yourself and the business is suffering. In the first few years, I can't tell you how much you should pay yourself basically, but you need to be able to have a contract where the business pays you on a monthly basis for actually working, and that way there's some form of reward that you can also use for your personal expenses. That would also be tagged, personal expenses in your books as well. So because of course you have to earn some form of remuneration or compensation for the work that you do. So yes, it is allowed, and yes, you can actually pay yourself from the business. It will not be seen as director's drawings or loan because you're actually doing, work for the business. The second one is in relation to penalties. Please, can you just quickly read that out again?
Okay, ma. So the question is, would penalties apply if government documentations are not met due to low cash inflows to the business over a particular period of time? What would you advise?
Okay. So low cash flows doesn't really impact the government. What impacts the government is basically what they've asked you to do from a regulatory point of view. So if you are a registered entity, you're expected to file your annual returns to CAC. If you do not file your annual returns to CAC, your business will be flagged as dormant and you may not be able to transact even with the banks as well. So you need to ensure that your filings are up to date. From a tax perspective, you also need to ensure that you are tax compliant. That's the other thing that impacts the government. So ensure that at the end of the financial year, you're assessing your transactions for the year, and then you're doing your tax computation and you're remitting your taxes on an annual basis. I think those are the two important things that might attract penalties if you're not compliant with. But from a cash flow perspective, I mean, businesses have their cash flow good days and bad days, but that doesn't impact the government. That impacts you as the business owner, your performance, where you need to be, where you want to be, and it helps you just determine what you need to do to get to where you want to be, but it doesn't impact the government. Thank you.
Thank you very much, Ma, for the response. Just one more question before I ask the next set of questions to Mr. Henry. So this person is asking, how can I maintain a structured account monthly in a nation where you get a job today and you still run up and down to get another the next month? How can I maintain a structured account opening in this situation?
Okay. So when you say job, I assume that it's in respect of your business, right? So how do I get opportunities that will help my business grow? Or is it your personal job? I need some context to that question, please. But if you're unable to provide the context, that's fine.
Yeah.
If it's in relation to your business, and getting opportunities for your business, it's if you get the opportunities and you're able to generate revenue, you need to capture those transactions as revenue and hit the bank as well as cash. If you incur expenses to be able to get those opportunities, you also need to be able to recognize those expenses in your P&L as well, because at the end of the day, you want to show a true and fair view. Once you're done with that particular assignment for your business, and you want to assess your profitability, you're going to be looking at what came in as your revenues. So you're looking at all the monies that came in as your revenues. You're looking at the expenses that you incurred to achieve those revenues, as well as your other operational expenses to be able to determine what your profitability is at the end of the day. So it's revenue less expenses equal to your net profits. I hope I've been able to do justice to that question.
Yes, you have, Ma. Thank you very much. Thank you for your time. Just one last question. Now, this one is for Mr. Henry. So this person is asking, I have a business name that I use for construction management. Can I get a loan from Zenith Bank to buy a tipper for the firm to be used for building materials, supplies, and pay back monthly? So I have a business name that I use for construction management. Can I get a loan from Zenith Bank to buy a tipper for the firm to be used for building material supplies and pay back monthly? Over to you, please, Mr. Henry.
All right. Thank you for that question. For the fact that you said you want to pay back monthly, I believe you're referring to a term loan, because a term loan allows you to pay back a certain amount monthly. In fact, when the loan is disbursed, you can get your amortization schedule so you know how much you're expected to pay on that set date of every month. So yes, you can. But remember, our SME loan has a maximum amount of 20 million. So I really do not know how much is the cost of this tipper. So if that 20 million will be fine, will be okay for you to afford the tipper, or if you are going to add more funds to it, Yes, so you can. Zenith Bank can give you up to 20 million for you to purchase this tipper. But just remember you have to have a good turnover from your business. Your cash flow has to be good for you to access this SME loan at these affordable rates. For the monthly repayment, is very, very possible. Thank you.
Thank you very much, Mr. Henry. Thank you very much. I believe that the participants that asked all these questions have gotten the responses that they to their questions. I've gotten answers to their question. Just one last question before we announce our winners from the poll question. So this person is asking, what documentation is needed to open a Zenith Bank business account? So I'll just answer that. Of course, first on the list has to be your CAC document. You have to have your business registered, right? So that's one of the key requirements that is needed for you to open a business account with us. And second on the list is you need to have a means of identification, right? Your NIN is important. We use that. You, aside from if you don't have, okay, you need your NIN, yes, your NIN and maybe your passport photograph, whatever it is that you can use to identify you. Apologies for the break. So this, like I said, the first on the list is your CAC document, and the second is your means of identification, your NIN, passport for passports, and just a means of identification, right? And then we also need your NIN is also very much important. Aside from your NIN, we need other, if you have other means of identification you'd like to use, we welcome them. Of course, your BVN is important. Your bank verification number is important also. And the next one is an account opening package. So this is where we, fill in all your details, which we are going to use to open the account for you. So these are just the basic requirements. See, they are not a lot. It's not hard to open an account today, business account today. So if you're still using your personal account to run your business, you are wrong. You are wrong. So walk into any of our Zenith Bank branch and request for an account opening package, and fill all the necessary information, provide all the necessary documentations that I've mentioned. Again, your CAC documents, very important. Of course, there's also the TIN. We need your TIN. We need your NIN. We need your BVN. We need your means of identification. So these are all important, and your details are saved with us. I'm sure you're all aware of that by now, that whatever information you are providing to the bank is secured. Your details will not be leaked to any external forces, if I should use that word. So your information are saved with us. Also, you could send us an email if you're looking to open an account today and you need guidance. Send us an email to sme@zenithbank.com and we'll guide you through all the process. With that, I'd like to say thank you so much to our first speaker, Madam Ololade Ajayi, and also a very big thank you to Mr. Henry. We would like to see the winners now. I'm sure all the people that answered the questions are expecting to know. They want to know if they are one of the people that will be walking away with exciting prizes. So right about now, our winners will be coming up on your screen. The winners for today's poll question will be coming up on the screen right now. So let's get that out of the way. So the winners are, drum roll. So our Zoom winners are Okena Samuel Umewori. I'm so sorry if I pronounced that wrongly, but Okena, congratulations. You are one of our Zoom winners for today's poll question. Our next winner is Oyeniyi Okuku Aziz. Oyeniyi Okuku Aziz. Congratulations. You are also a winner from today's poll question. Our next winner are Abimbola Akin Odimpe Ogudimpe. Abimbola Akin Ogudimpe. Congratulations, congratulations, congratulations. And our last winner on the Zoom, from the Zoom poll question, is Taiwo Oyedokun. Again, I really apologize if I'm not pronouncing your surname right, but congratulations to all of these winners. Congratulations. Like I earlier mentioned, you can, walk into any of our Zenith Bank branch if you do not have an account with us already, because that is one requirement that is needed for you to, get your gift. So if you don't have an account with us yet, no problem. Just walk into any of our branch before the end of today or before the end of the week and open an account for yourself, and your gifts will be dispatched or will billed to you in any part of the country where you are. So congratulations again to our Zoom winners. Now to the YouTube winners. Congratulations, Martin. Martin Anunadu. Anunadu. Congratulations, and congratulations to RC Foods and Farms Limited. Wonder who this person is. Please, would like to know your name. Please just maybe send us an email to sme@zenithbank.com so that we can get your exact name. Congratulations again. I know this. It seems like this is a business account that you used to join. So hope you are, you have our business, you have a Zenith SME business account running already. If you already have that, congratulations. Your gift will be dispatched to you. But if you don't want to see this name next week in the list of people that opened accounts with us, so please walk into any of our Zenith Bank branch nationwide and open an account for yourself today. So congratulations again to all the winners. Congratulations, congratulations. And with that, I'd like to say thank you to everyone. Thank you to all the participants. It's always amazing to have you here with us. I'd just like to say that for those of us with business accounts already, there are exciting, places your accounts, your business accounts can take you to. We have our SME Arena. So our SME Arena is a platform where you can, access different courses to build yourself, establish your business. On there are professionals on that platform where you can learn from. And to be able to access this platform, you need an SME account. So if you have a business running already and you do not have an SME account with the bank, do well to walk into any of our branches, open an SME account so that you can stand a chance to, access this SME Arena. It is smearena.zenithbank.com. smearena.zenithbank.com. You could go on this, search this on any of your search engines, and you'll be directed to the page where you register with your active business account and have access to all the numerous courses there that you could use to build yourself. Like I mentioned earlier, this is a recorded session. So this meeting this training, this session, this webinar will be posted on the SME Arena. So it's smearena.zenithbank.com. So you could always go there to rewatch. And for our YouTube listeners, in fact, like I said earlier, we shared the link. You could go to our YouTube page, search Zenith. You could go to YouTube, search Zenith Bank, and you have access to all the previous sessions we've aired before now. Even this one also will be posted there. So do well to, establish yourself, build yourself up and take your business to greater heights. Again, thank you very much for being a part of this session. Thank you so much, Madam Olola Deajayi, for doing this with us for the month of February. Thank you, Mr. Henry, our second speaker. With that, I would like to say a very big thank you to the management. We are always excited that you made this platform available for us to talk to our customers. So it's a small community, And it's always exciting to see participants. And this can only happen because you've given us the free will to do this. So a big thank you to our managing director, excos, and everyone that has made this possible, the digital team, the IT team, and of course, retail banking group. Thank you so much once again. And stay blessed. See you next month, same time. Last Thursday of every month, we do this. Share the links, invite your friends. Don't miss out on the next exciting topic we'll be bringing your way. Again, till we meet again, take care and bye for now.